Good evening, students. I hope you have revised the last discussion that we had. In today's class, we are going to focus, as I told you, on the rest of the areas with respect to the AOP, BOI, HUF, cooperative society, right? But before that, we will solve certain questions from the module. So let me quickly share the module to you so that we are able to solve the questions now. And you are required to solve the question yourself so that we can discuss the answers with respect to that. So let us quickly start with it. Let me just share the screen. We'll take one or two questions on the partnership firm and the full-fledged question. T and Q are individuals aged 28 and 30 years respectively who constitute no, sorry, this is the AOP one. Sorry. Yeah, 1 second. Yeah, X, Y, and HUF of Z, represented by Z, are partners with equal shares in profit and losses of a firm, measures Popular Cinevision, which is engaged in the production of TV serials and telefilms. The earlier partnership deed did not authorize payment of remuneration or interest to the partners. The partnership deed was revised by the partners on 1st June 2025 to authorize the payment of remuneration of 1 lakh per month to each working partner and simple interest at 15% per annum on partners' capital. X, Y, and Z are actively associated with the affairs of the firm. P&L of the firm for the year ended 31st March 2026 shows a net profit of 10 lakhs after debiting or crediting the following. Interest amounting to 5 lakh each was paid to the partners on the balances standing to their capital accounts from 1st June 2025 to 31st March 2026. So let us start with it. What will be the effect of this? Yes. What will be the effect of this, students? Faster.
12% interest is allowed. Above that, it is disallowed.
Yes, that's right. Interest up to 12% is allowed. So what is 12% coming to? So we have the capital information given over here. Yes. What will be the amount? Students, you have to be very fast.
3 lakhs disallowed, ma'am.
Yes, everybody else. What will be the disallowance? 3 lakh? Is everyone getting 3 lakh? Yes or no? Interest will be disallowed to the extent of 3 lakh. That's the correct answer. So how did you arrive at it? 12% is what is allowed, right? 3% is the excess interest. So very simple. What we will do is 5 lakh is 15%, right? So 5 lakh into 3 divided by 15 will give you the amount of the disallowance, which is 3 lakh. So even though the capital information is not given, still we are able to get the amount. Clear? So interest disallowed will be 3 lakhs. So let us look at the answer here. Net profit as per P&L 10. Interest to partners in excess of 12% is 3 lakh. Clear? Next, remuneration to the partners, including the partner in a representative capacity, 30 lakhs.
First, we add 30 lakhs and then we will take deduction of it as per rules, income taxes.
Correct. That's right. So first we'll add the 30 lakh amount. Very simple. And then we'll calculate at the end once we identify the business firm. Interest amounting to 2 lakh paid to Z on loan provided by him in his individual capacity at 16% interest.
It is allowed, ma'am, because it is individual capacity.
Yes. So in that particular case, even though my interest is more than 12%, right? But the Z is representing HUFZ. He has given the loan in his individual capacity. So in that particular case, if you look at this, it says where an individual is a partner in a firm in a representative capacity, the provisions of 40B shall not apply to an interest payable by the partnership firm to the individual in his personal capacity. Z is representing his HUF in the firm. However, Z gave the loan in his individual capacity. Hence, assuming that the provisions of 40A2 also do not get attracted in this case, the interest shall be allowed as a deduction in full even though the interest rate is more than 12%. So to write this point that even though it is assumed that 40A2 is also not applicable. Are we clear? Because if 40A2 is there and if the interest is more than the fair market value, then to that extent it will get disallowed. Okay? Royalty of 5 lakh paid to partner X, who is a professional script writer, for use of his scripts as per the agreement between the firm and the X. The same is authorized by the partnership deed.
This is also added back, ma'am, because it is a remuneration and all income, commission, everything is up to limit
Very
of
good.
40B.
Correct. Very good. So, if you look at it says the 40B is applicable in case of payment of salary, bonus, commission, remuneration by whatever name called. So any kind of payment to a working partner, like any remuneration, is subject to the limits of 40B5. Therefore, the royalty payment will also be added back because it will be subject to the limits of 40B5. Clear? Two separate payments of 18,000 and 15,000 made in cash on 1st February 2026 to Altaf, a hairdresser, against his bill for services rendered in January 2026. And two payments of 19 and 10,000 made in cash on 1st February and 2nd February 2026. Respectively to Priyam, an assistant cameraman, against her bill for services provided in Jan 2026.
It is disallowed, ma'am. Only 10,000 is allowed and all others are above 10,000. So disallowed.
So here, if you look at the payment of 18 and 15 is made on one day, right? Is made on one day by cash in a single day to a person. So 18 and 15 to Altaf shall be disallowed since the aggregate payment has exceeded 10,000. With respect to the cameraman, again the payment is made on the single day which has exceeded 10,000 even to a different person. That will also get disallowed. However, with respect to the 10,000 which is there, that will not get disallowed. Are we getting this particular point? Yes or no?
Yes, ma'am.
Right? So, the 52,000 rupees will get disallowed because the payment has been made on single day to Altaf and even to Priyam, even if he's a different person, but it is made on a single day exceeding 10,000. So, this will get disallowed. Okay. Next. Amount of 5 lakh provided in the books on 31st March 2026 as liability for remuneration to Shreya, a film artist and a non-resident. Tax deducted at source from the amount so credited was paid on 3rd June 2026.
Is allowed because before due date of income tax it is filed, ma'am, deducted.
So, any sum payable to a non-resident which is chargeable to tax, right? If the tax has not been deducted or after deduction of tax has not been paid, then in that particular case, the 40A1 provision says that the payment will be disallowed entirely. Now, this is deposited by 3rd June. And therefore, it is well before the due date of filing of the return of income, which could be 31st July or 31st October. Right? So, therefore, no further adjustment is required. Are we clear? Yes or no? Okay, next one. Amount of 6 lakh provided as gratuity for the year on the basis of actuarial valuation. Gratuity actually paid to one retired employee 1.5 lakh.
Actually paid gratuity is allowed 1.5 lakhs and balance amount disallowed.
Okay. If it would have been MAT calculation,
Then fully allowed, ma'am, because
yes,
actual
yes, correct. So the actuarial valuation when it is carried out and when the gratuity is paid, right? So in that particular case, what happens is it is based on the ascertain liability, right? It's an ascertain liability provision for ascertain. It's not unascertain. However, section 40A7 specifically disallows the provision for gratuity. But when you look at for the calculation of the book profit for the purposes of MAT, then in that particular case, there is the allowability because provision for certain liabilities are allowed under MAT. But in the normal tax, this will be disallowed and the actual gratuity paid of 1.5 lakh will only be allowed. Next, interest of 1.2 lakh received on income tax refund in respect of AY 25-26.
Chargeable to tax in other heads of income. This is income from other sources.
Yes. So this will be chargeable under the other head, other sources. Okay. Compute the total income of the firm for the AY 26-27, stating the reasons for treatment of each item. So now we have to calculate the remuneration. So this is how the net profit was there. We have disallowed interest. We have disallowed the cash expenses 52,000, provision for gratuity, partners remuneration, royalty, less interest on income tax refund, which is now taken separately, right? So how will you calculate the partners remuneration? So book profit comes to 51,82,000. So can you calculate what is the allowable remuneration?
It's 33 lakhs 25,200 as per 50B.
No. There's some mistake.
Up to 5 lakh, up to 6 lakhs, it is 90%.
Correct.
And
Which comes
balance
to,
book profit 60%.
yeah. So first 6 lakh 90% comes to,
5 lakh 40,000.
correct. And the balance book profit is,
27 lakh 85,200.
no. 51,82,000 is the book profit. So 6 lakh when you deduct it, it comes to 45,82,000 into 60%. So the total comes to 32,89,200.
Yes, ma'am, calculation is right.
Yes.
Yes.
And the actual remuneration paid is how much? Actual remuneration paid was how much? 30 lakh?
30 lakhs plus royalty we have to take, no?
5 lakh.
Huh.
Correct? 30 lakh plus 5 lakh, 35 lakh. So we'll get only deduction of 32,89,200. Will Z also get the remuneration because Z is in the representative capacity? So Z is a representative capacity partner. Will Z also get the remuneration and will be subject to 40B?
No, ma'am.
He will get. See that limitation with respect to the representative capacity, personal capacity is only applicable for interest. It is not applicable for remuneration.
Okay, thank you.
So the remuneration paid to Z as in a representative capacity also will be subject to 40B fine. Clear? Okay, students. Yes or no?
Yes, ma'am.
Okay. Let us solve one more question on partnership firm. Measures Beta and Company, a partnership firm in India, is engaged in the development of software and ITES services through two units, one of which is located in a notified SEZ in Noida, commenced operations from 1/4/13, other located in a DTA. The particulars relating to the 25-26 previous year furnished by the assessee are as follows. Total turnover for SEZ unit is 2110, for DTA unit is 90. Export turnover for SEZ unit is 150, received in India and convertible foreign exchange before 30th September 25. For DTA, it is 50 lakh. Profit of SEZ unit 50 lakh and for DTA unit is 40 lakh. Amount debited to the statement of P&L and credited to the SEZ reserve in reinvestment reserve account 20 lakh. Considering that the firm has no other income during the year, compute the tax liability by integrating, analyzing, and applying the relevant provisions of the income tax law. So how will you start with this question? Pen double A Samnathan, yes, that's right. So how will you start with it?
Profit as per says unit means 50,000.
Hmm. Yes, then profit as per SEZ unit 50 lakh. Then what you will do?
See the years, 5 years and 10 years, then 50% or 100% will be given.
Good, yes. So here, first of all, you will take profit as per SEZ unit. Okay. Then what else we will do? Add 20 lakh reserve. Yes, very good, Samyathan. We will add back this amount credited to the SEZ reinvestment reserve account 20 lakh, right? So because it's debited to the PNL, I will add back, right? So this will become 70. I'll take DTA unit profit, which is 40, right?
Yes, ma'am.
So that will give me the gross total income, 110. Now, then we have to calculate the deduction under 10AA. So how will you calculate the deduction under 10AA?
Says profit multiplied by export turnover divided by total turnover.
Yes. So what will be the SEZ profit that you will take 50 or 70?
Fifty.
70. Yes, Samnathan. We'll take 70, right? 50 or 70, everybody else. 70. Because 70 is the profit, right? It's not 50. 50 and then you have also debited to SEZ reserve. So that you have to add back.
Okay, ma'am.
Yeah, you will not take 50. We'll take 70 as the profit. So in exam, most of you will make mistake by taking 50. The 50 is after debiting to the SEZ reserve account. The actual profit is 70. How do I know that? It's clearly written amount debited to the SEZ reserve investment account. So means this is after considering this debit to the reserve account. So therefore, I need to take 70 into 150. This entire amount is received within 6 months divided by 210 lakhs into
50%.
50%. Yes, do not forget that because this is the 13th year. So this comes to 25 lakh. Now 25 or 20, whichever is less is deductible. Are we getting this? Yes or no? So you have
Why
to
they
compare. Yes.
okay? Why they are means taking 20, ma'am? If we have calculated 25.
No, because that's a formula, right? That's what they say. When you calculate the deduction under 10AA, they clearly say that you have to take into consideration the deduction, which is the deduction which you have calculated or the amount transferred to the special reserve account, whichever is less. Are you getting this point? So
Okay,
you have to
okay.
take the lower of these, and basis that you will be able to arrive at the answer only. If you take without this, you will get the wrong answer. You have to take a lower of this. Lower of 25 or 20, whichever is lower, will have to be taken into consideration. Yes or no?
Yes, ma'am, understand.
What else we have to see in this? What will be the tax rate?
It is firm, so 30%.
It is a firm, so 30%. Good. What else do we need to see here? Yes.
Whether VAT provision will apply to this, ma'am? This is says then also.
MAT will apply?
I don't know, ma'am.
Yes. Yes. Yes, students, what will apply? Yes, Cyril, very good. The AMT will be applicable. MAT will not be applicable.
It is not company. Yes, ma'am. Yes.
Yeah, it's not a company. It is the partnership firm. And the AMT will be applicable. Are we getting this particular point? Now, how
Yes.
will you calculate the AMT?
We have to add back this 10 double A deduction and then 18.5% of adjusted total incomes. You have to take tax rate.
Correct. Yes. So basically, you have to add back the amount of the deduction. Do you reduce the depreciation like we used to do in 35AD?
Oh, ma'am, here asset is not there. No?
Yes. So here, it's not 35AD. It is the 10AA. So here we don't add back the, don't reduce the depreciation. So what we are going to do here is the tax which we have calculated, which is 28.08, then the AMT. So total income is 90, right? Which is basically this amount after the deduction. Add back the deduction, so which is 20. The adjusted total income is 110. Then 18.5%. Here the surcharge will also come because the income is exceeding 1 crore. The adjusted total income is exceeding 1 crore. So we will have the surcharge as well. And the cess, which makes the AMT 23.704 compared to the normal tax liability 28.08. So what you will pay? We will pay the normal tax. Okay? Is this clear?
Yes, ma'am. Thank you.
Now, if you look at this particular point that you were asking, I just opened up this. to clear your confusion with respect to 50% or the amount transferred to special reserve. So see, if it would have been 5 years, right? In the first 5 years, you get the 100% of the gains derived from the export. Then for the next 5 years, you get 50% of the profits as a deduction. For the balance years, for the next 5 years, after 10 years, then 50% of the profit subject to the amount credited to the reserve account. Are we clear? Yes or no?
Yes, ma'am.
Fine. Is this question clear to everyone? Yes, any questions, any doubt?
That means this one is third, fifth year means, right?
Yes, it's a 13th year. Okay.
Okay, ma'am.
So this was my 13th year and that's the reason why we are taking it the 50% subject to the amount transfer. Fine. Okay. Any other question, any doubt? Fine. Let us move forward then. Let us start discussing the other areas and then we'll come back to the questions. Now we come about the taxation of the AOP or BOI. What is the difference between AOP and BOI?
AOP is association of person, in that companies and all will include. In BOI only body of individuals are there.
Correct. AOP is the association of person, BOI is the body of the individual. AOP can have companies, partnership firms, anybody as member. So basically what they do, they come together, AOP or BOI, to form or to undertake the business for some specific purpose. Like they have a common purpose. They want to share the profits. They have the common object. Right? However, what is an exception to AOP? Can anybody recollect and tell me? There is one exception to AOP which is provided under the Act. In one situation, we say that even if there are people which are coming together but they are not constituting the AOP. Can anybody tell me that?
It is cooperative society, ma'am.
No.
Is it a legal heirs of a
No.
deceased person?
No. Section 26. What is it? What is Section 26 of the Income Tax Act? Yes. I've given you the answer. What is Section 26?
Co-owners of house property.
Yes, very good. So, Section 26 is an exception which says that co-owners of the house property will not constitute the AOP. Co-owners of the house property cannot be assessed as AOP. Yes or no? Fine. What are the tax rates applicable to AOP? What are the tax rates applicable to AOP? Individual slab? Yes, Samyathan. So normal tax regime, what is applicable to individual or Section 115 BAC? What is the rate of surcharge as applicable to individual? However, maximum surcharge shall be 15% under the normal tax regime or even under 115 BAC regime, provided that the income is taxed under 111A, 112, 112A or 115AD, right? If it's a long-term, short-term capital gain or for FIIs. Or AOP has only company as members. In that case, the maximum surcharge is 15%. Right? So that is the tax rate. Now, how do you compute the income of the AOP? So we divide it into two parts, where the shares of the members are known, where the shares of the members are unknown. Okay. So if the shares of the members are known, like we know what is the share, exact share of each member. And if the total income of any member, excluding that share, is greater than basic exemption limit. What is the basic exemption limit?
If 115 BSc 4 lakh and normal provision 2.5, 3 and 5 lakhs.
Correct. So if the total income of any member is more than this basic exemption limit, excluding the share, right? Then in that case, you have to see if any member has a tax rate greater than the maximum marginal rate. What is maximum marginal rate? What will be my maximum marginal rate, students?
It is 30%, 25%, 4%.
30%, 25%, and 4%. That is under 115 BAC. But what if you go for normal tax regime then?
37% surcharge.
So under the old regime, the MMR will be 42.744%. Under the new regime, it will be 39%. So if any member has a tax rate greater than MMR, for example, if the foreign company is a member, it is having a tax rate of 35% plus surcharge of 5% plus 4%. So it has a tax rate greater than MMR. Yes? In that particular case, the portion of that particular foreign company, the income attributable to that foreign company, will be taxed at a higher rate. For other members, the other members' income will be taxed at the MMR. Are we getting this? So if the shares of the members are known, let's say there are 3 members and the share is 1:1:1. Fine? And in that there is one foreign company, the other 2 are, let's say, individuals. Right? Now, the share of the members are known. The total income of the foreign company, the basic exemption limit is not applicable, right? For the others, they have the income more than basic exemption limit. So total income of any member, it is not saying that, if one member has less than basic exemption limit, others have more than basic exemption limit, still we will go under this particular bracket. Right? In that particular case, foreign companies' tax rate is more than MMR. So then, let's say the income is 10 lakh or let's say 9 lakh. Right? So to the extent of that 3 lakh, the tax will be at the higher rate. And on the 6 lakh, the tax will be at MMR. Is this clear, students? Yes or no?
Yes.
And in the hands of the member, the share of the AOP income will be exempt because the AOP has paid the tax at MMR. In the hands of the member, it will be exempt. What will be the impact under the MAT if the member is a company? Like in this case, the member is a foreign company. So will there be a MAT applicable on the member's share if it is credited to the P&L account? No. Why? Yes. Yes, students, fast go to the math provisions and tell me.
Because it is already text, ma'am. It is reduced
But is
under
there an
section 8.
exemption under math? Yes, students, please go back to the math class and see. I need the answers. Yes, faster. I need the answers. Yes, you have not clearly revised it. What did we discuss that day? Share of the member in AOP or BOI when no tax is payable under 86. Less the income, add the expense. Yes or no? Yes.
Yes.
So there is a explicit explanation provided there which says that you have to exclude this income, right, from the book profit calculation. So in this particular case, we will exclude this share of the member. There will not be MAT applicable on the share of profit. You have to exclude from the book profit. Is this clear to everyone? Yes?
Yes, ma'am.
Yes. Yes.
Okay. Now, if no member has the income greater than basic exemption limit, in that case, the AOP will pay the tax at the slab rates, which will be either 115 BAC or the old regime. And the member's share will be included in their income and they will get a rebate under 110. We will see this separately, how to do that. Okay. Now, if the members' shares are unknown, if the shares of the members are unknown, we don't know what is their share because they have not determined. And if any member has a tax rate greater than MMR, then AOP will be taxed at higher rate. Here, since you do not know the shares of the member, obviously you cannot break it into two parts saying that the share of the member taxed at higher rate will be taxed at higher rate. For others, it will be taxed at MMR. We don't know the shares. So the entire AOP will then be taxed at a higher rate. And if no member has a tax rate greater than MMR, in that particular case, AOP will be taxed at MMR, but in the hands of the members, the share will remain exempt under 86 and they will not have MAT liability also. So wherever there's an exemption under 86, because the AOP has paid the tax at MMR, in that particular case, the MAT will also not apply. In this scenario, where the AOP is not paying at MMR, but the slab rate, in that case, the MAT will still be applicable. Clear? Because here no member has income greater than basic exemption limit, means we are only talking about the individuals, because companies, partnership firms do not have basic exemption limit, right? So the question of MAT itself does not arise. Are we clear? Is this clear up till now to everyone? Yes? Yes or no?
Yes, ma'am. Can you give the example with numbers, ma'am, for all?
With respect to which scenario?
Both the scenarios, ma'am.
So this to be discussed, right? As I said that, let's say for example, if the income is 9 lakh, and if one of the foreign company is there as a member, right? So if the foreign company is there as a member, it doesn't have a basic exemption limit. So therefore, there is a member whose income is more than the basic exemption limit, right? Even if the other two members may be individual, having the income less than basic exemption limit, doesn't matter, because it says total income of any member greater than basic exemption limit. So foreign company doesn't have basic exemption limit. So we'll go into this case. Now, if any member has a tax rate greater than MMR, foreign company has a tax rate more than MMR. So then portion of that foreign company, the income attributable to that foreign company. So the ratio was 1:1:1. My income is 9 lakh AOP income. So 3 lakh will be taxed at a rate applicable to foreign company. The balance 6 lakh will be taxed at the MMR. Simple.
Yes, ma'am. Yes.
In
Yes,
these
ma'am.
two cases, again, where the shares of the members are unknown. Now let's say if a foreign company is a member and it has a tax rate greater than MMR. We don't know the shares of any members. So then the entire 9 lakh will be taxed at the rate applicable to foreign company. And if no member has a tax rate greater than MMR, if all the companies are domestic company, then in that particular case, the AOP will be taxed at the MMR, which is 39% or 42.744% if the members are individual. If the members are not individual, if the AOP opts for the old regime, then it is 42.744. If the AOP opts for new regime, it is 39%. Clear?
Yes, ma'am.
Now coming to this last one, no member has income greater than basic exemption limit. So how do you compute the basically tax in the hands of the member? In the hands of the AOP, you will be taxed at slab rate, which is going to be very simple. Slab rates are same as that applicable to individual. But in the hands of the member, first you compute the share of the income from AOP or BOI, excluding any interest, remuneration, commission paid to the members. You apportion the income under the same heads of income as characterized in AOP's hand. Let's say, for example, if 5 lakh was the income, out of which 2 lakh is IFHP, 3 lakh is IFOS, you allocate the share of the member also into same proportion in the ratio of 2:5. So let's say if the member gets 1 lakh as the income, so 2:5, 2 will go into the IFHP, 5 will go into the IFOS. Then you add the interest, remuneration or commission receipt. Right? Because interest, remuneration and commission is not allowed as a deduction in the hands of the AOP. It is not allowed as deduction in the hands of the AOP. Less any interest on loan taken for investing in AOP. So if you have borrowed the money, paid the interest for investing in AOP or BOI, you will get the deduction of it. You will get the total income from AOP or BOI. You calculate the tax on the total income, find out what is the average rate of tax, and the rebate will be income from AOP or BOI into the average rate of tax. Fine. We'll solve one example on this and we'll see how you calculate it. Let me take up a question from the module. JK Associates is an AOP consisting of two members, J aged 40, K aged 37. Shares of members are 60 and 40. Income of the AOP is 11 lakh. J and K's income other than the income from AOP amount to 2.5 and 2.9 lakh respectively. Compute the tax liability of AOP assuming J exercises the option to shift out of default regime and AOP and its member K pays the tax under the default tax regime under 115 BAC 1A. So how will you start with it? Dhruvi, your question is if Indian company is a member of AOP having the tax rate at 25%, then AOP will be taxed at MMR? Yes, it will be taxed at MMR. Yes.
Ma'am, members' share is not, means members' income is not more than a basic exemption limit,
Hmm.
4 lakhs. So, JK Associates AOP's income will be taxed as per slab rates.
Yes. Very good. So compute the tax liability for JK Associates.
It's 50,000 and 4% cess.
Yes. Very good. So everybody getting 50,000, 52,000 will be the answer. Yes, everyone got that? Yes or no? 52,000 is the answer.
Can you please explain how
Sure,
did that went through?
sure. So basically, here, if you look at this is the income of the AOP 11 lakhs, right? The members have the income less than the basic exemption limit. So if you see, J has opted for the normal tax regime. It is less than 2.5 lakh. It's exact 2.5. K has chosen to stay under 115 BAC, which is 4 lakh, right? The basic exemption limit. And he has income of 2.9 lakh. So both have the income less than the basic exemption. So this 11 lakh will be taxed at the slab rate. Now AOP is also going as per 115 BAC 1A, right? So 4 lakh to 8 lakh 5%, which is 20,000. 8 lakh to 11 lakh 10%, which is 30,000. So 50,000 is the tax liability and cess comes to 4% 2,000, which is total to 52,000. Is this clear?
Clear, madam, clear.
Okay. Now,
Good.
how will we compute the income in the hands of first J? J's share is 60% and K's share is 40%. First, we'll talk about J. What will you include in the J's share? Can you calculate the tax liability for J? Yes. Yes, 9.1 lakh. Samnatan, that's correct income. Keshav, whether member income below basic exemption limit is to be seen before considering the income from AOP BOI or for only that BOI for which he is calculating tax. You have to see before the share of the AOP or BOI. Yes, Samnatan, very good. The tax comes to 98,280. Everybody getting this? 6,60,000
Yes.
share of the AOP. Income from other sources 2.5 lakh. It comes to 9 lakh 10,000 is going as per the old tax regime. So it comes to 98,280. Yes, for K, 4 lakh 40 is the share of profit. Income from other sources 2.9. Total tax liability comes to 17,160. Is everybody getting both these same answers?
Yes, ma'am.
Yes. Now, what is the average rate of tax? The average rate of tax is 98,280 divided by 9,10,000. Right? 10.8%. Here the average rate is 17,160 divided by 7,30,000. 2.351%. So the rebate will be 98,280, 10.8% into 6,60,000. Right? This is the share of the AOP into the average rate of tax. Right? So that will be my rebate. Here it will be 4,40,000 into 2.351% will be the rebate, which is 10,344. And this will be reduced from my tax liability and it will come to 27,068.16. Are we clear? Yes or no?
Yes, ma'am.
Any questions, any doubt? Yes, students? Is this clear to everyone? Yes? Yes, I need the answer. Is it clear? Okay. Let us then move to a next question from the module itself. Let me open up just a question for you. Yes. T and Q are individuals aged 28 and 30 years respectively who constitute an AOP sharing the profit and losses in the ratio of 2:1. For the accounting year ended 31st March 26, the P&L is as under. Figures are in thousands: sales, dividend, LTCG, remuneration to TQ employees, interest to TQ, other expenses, GST penalty, net profit. Then there is some additional information given. Other expenses include wristwatches costing 2,500 each were given to 12 dealers who had exceeded the sales quota prescribed under a sales promotion scheme. Employer's contribution of 6,000 to the PF for the month of November was paid on 14 Jan 2026. 30,000 was paid in cash to advertising agency for publicity. Outstanding GST penalty was paid on 15th October. The penalty was imposed for non-filing of returns and statements by due date. T and Q for this year income had income from other sources 360 and 232 respectively. Compute the total income of AOP and discuss the tax implication for that year in the hands of individual member. So first we'll start with the AOP. How will the taxation happen in the hands of the AOP? What is it given? T and Q at this income. So how will the tax work in the hands of the AOP?
Net profit we have to take, ma'am, as per normal business.
No, but first of all, what will be the tax rate for AOP?
For individuals tax rates, no, ma'am.
Individual tax rates?
Members share is given, na, 2:1.
Yeah, so members' share is known. But what is the whether the income of the member is more than the basic exemption limit?
As per normal provision, we will see then T's income is more.
Hmm. So then how will you tax? Faster? 115 BAC normal rate since everyone is under the basic exemption limit, assume T and Q are under default, 4 lakh. Yes, Cyril, yes, Samyathan. Yes. So basically, if you say that T and Q are not opting out of the default tax regime, right, which is not given in the question, then the AOP will be taxed at the slab rates. Yes or no? But if we say that T and Q are opting out of the 115 BAC, right? So in that particular case, they have the income, or at least one member has the income more than the basic exemption limit. If that be the case, AOP will be taxed at the MMR. So you have to write that both the points in the exam because the question doesn't tell you that whether they are opting out of the default tax regime. Okay? Yes or no?
Yes, ma'am. Thank you.
Okay. Now we'll start with the ALP. So AOP net profit is 524.3. Will you get the deduction for the cost of goods sold? Yes. What about the remuneration to T and Q?
Not allowed, ma'am, in AOP.
Sorry,
Disallowed, ma'am.
it will be disallowed. So we'll add back this 130 and 170. We'll give for employees. Employees remuneration will be allowed. Interest to T and interest to Q.
This is also not allowed in AOP.
This is also not allowed. Perfect. Other expenses. There's some information given about the other expenses. Wristwatches costing 2,500 each were given to 12 dealers who had exceeded the sales quota prescribed under a sales promotion scheme.
Allowed, ma'am, it is.
This is allowed. Normal business expenses, right? Employer's contribution of 6,000 to the PF for the month of November 2025 was paid on 14th January 2026.
It is allowed, ma'am, because 31st May is last date, for this. It is
Correct.
before it.
Not 31st May. It is before the due date of filing of the return of income. It is employer contribution, not employee's contribution.
Yes, ma'am.
Employer contribution as per 43B, you can pay any time before the due date of filing the return of income. So this is paid during the year itself before the due date, so allowed. 30,000 was paid in cash to an advertising agency for publicity.
Forty-three not allowed, ma'am.
This will be disallowed. Next is GST penalty due. Outstanding GST penalty was paid on 15th October. The penalty was imposed for non-filing of returns and statements by the due date.
Penal expenses not allowed, ma'am.
It is not allowed, right? Because this is penalty. Yes. Then you have dividend from Indian companies 25.
This is income in other heads of income from others.
This will be under other head. Long-term capital gain,
Same, ma'am. It is comes in other head.
other head. Okay. So this will give you the profit and gains of the business for the AOP. And basis that you will find out the tax rate, which is going to be the MMR. If you say that the members have the income greater than the basic exemption limit. What will happen in the hands of the member?
This this income will be exempt because
Correct.
in this MMR rates are paid, no?
Correct. So if the AOP has been taxed at MMR, the member's income will be exempt. If the AOP has been taxed as per the slab rate, then in that particular case, the members will be taxable, but they will get a rebate under 110. Fine, students?
Yes, ma'am.
Yes or no?
Yes, thank you.
Okay. Okay. Then next we move about the taxation of the HUF. Let us discuss the taxation of the HUF. How are the HUF taxed? Yes, what is the tax rate for HUF?
Same as slab rate, normal and BAC.
Same as slab rate. What is applicable to the individual? The same tax rates are applicable even for the HUFs. So if they go for normal tax regime, they have the normal tax regime. If they go for the 115 BAC, they have that. So there is no difference between the tax rate of the individual and the tax rate of the HUF. Right? So the tax rates remain the same. Next, how the taxation happens in the hands of the HUF. So there are certain provisions which we need to know in respect of the taxation of the HUF. So with respect to the HUF, right? So the share of the profit which is there, that is taxable in the hands of the Karta. Yes or no?
Yes, ma'am.
Is this taxable or exempt?
Share is exempt.
Yes. So for the HUF, when you talk about the share of the HUF in the hands of the Karta or the members is exempt. It is not taxable. Okay. So an HUF is treated as a separate entity. The HUF will be taxed on its own income as per the slab rates. Right? But when the income is received by the Karta, that is not taxable. Fine. Secondly, the surcharge rates will remain the same again as per the individual rate only. Third thing, when the HUF is earning the income, right? So, in that particular case, it is considered as the income of the HUF itself. When the Karta starts the HUF, he gives the property to the HUF. He brings the property to the HUF. What is the taxability of that? Yes.
It is taxable in the hands of HUF.
So basically, it is if it is given for inadequate consideration by any member, then in that particular case, it continues to be clubbed in the hands of the income from that continues to be clubbed in the hands of the member. So income from a property, right, of any member will be assessed as a personal income and not as the income of the family, even when he converts the property into the HUF. So once the assets are belonging to the individual and they are put into the joint family property, the income which is there will not be of the income of HUF because of section 64(2), which specifically provides that the income from the converted property is taxable as the income of the transferor. Are we clear? So if the property is transferred for otherwise than for adequate consideration, right? If it is transferred for less than fair market value, then the income will be taxable in the hands of the particular person. Are we clear? Yes or no?
Yes, ma'am.
Yes.
Remuneration to the member. Yes. Any questions? Fine. Remuneration to the member of HUF. Is it
Ma'am,
allowed as
ma'am, one question means, see, if you said that if any member without adequate consideration transfers its property, its personal property to HUF, then it will be taxable in the hands of member.
the
My
income
query
from that
is that
property?
means if only he had means how if HUF don't have any income, then it will be taxable in the hands of member every time.
No, see the income from the property. Let's say I've transferred an immovable property and today it doesn't have a rental income. Tomorrow it generates a rental income. So then in that particular case, the rental income will be taxed in the hands of the member as per the clubbing provision.
Tax it will be taxable in the hands of member.
Yes.
Okay. Acha, now HUF had started generating income. So either HUF had to transfer it into as an educate consideration. नहीं तो educate तो होगा नहीं ना because immovable
Correct.
property. Okay.
So if you transfer, if the HUF gives the consideration to the member, it's fine. But if it doesn't give the fair market value, then it's a problem.
Okay, fine. Thank you, ma'am.
Okay. Remuneration to the Karta, remuneration to the member. whether it is allowed as deduction.
Yes, ma'am, allowed in the hands of.
Yes, it will be allowed as a deduction. Okay. Then if the HUF receives the gift from the member, if it's a gift, then 56(2)(10) is not applicable in the hands of HUF. This is, we are saying, in the hands of the member. If the property is transferred for inadequate consideration, then the income from the property will be clubbed in the hands of the member. But in the hands of the HUF, whether 56(2)(10) is applicable on the receipt of the property for inadequate consideration, answer is no. 56(2)(10) is not applicable if the gift is from the member. In the hands of member, 64(2) will continue to apply. Clear? Okay? Yes or no?
Okay. Okay.
Then distribution of capital asset on the total or partial partition of HUF, it is not regarded as transfer under 47. There is no capital gain. And in the hands of the member also, 56(2)(10) is not applicable. Is this clear?
Yes.
Yes, ma'am.
Okay, any question, any doubt? Let's solve one question from the module. Okay. Mr. Ram, aged 56, is the Karta of his HUF. The HUF consists of himself, his wife, two sons, Mr. C and minor D. The HUF is assessed to income tax and has business income from the year 2015-16 onwards. The business income of HUF for the year ended 31st March 26 is 5 lakh. Ram is employed in a private company and his salary income from the same period is 6,10,000. You are requested to answer the following, treating each item as the independent situation. Mr. C gave a cash gift of 1 lakh to HUF of Ram. What would be the total income of HUF?
Ram is major, no? So, ma'am, it is taxable in the hands of Ram only.
He has given a cash gift. How he has given a gift? How will it be taxable in the hands of Ram?
It would be taxable. First one is taxable in the hands of Mr. C.
In the hands of?
C.
Why it will be taxable in the hands of
No,
C?
no. And because it is a gift from the member's relative. So this will not be applicable and it will be taxable in the hands of HUF only.
No. Yes, Samnithan, correct?
Yes. Not clubbed money. This 1 lakh will. It is a gift.
Yes. So here 56(2)(10) will not apply because C is the son of Ram who is relative of the HUF. So 56(2)(10) will not be applicable in the hands of the HUF. Yes. 56(2)(10) is not applicable if you receive a gift from the member of the HUF. Clear?
Yes.
Okay.
Yes.
What would be the total income of HUF? Here they have said income of the HUF is 5 lakh. Whether the Ram's income will also be clubbed in the hands of HUF, this 6,10,000.
No, ma'am. It
Why?
is private because he is earning salary from this private company. It is not HUF's income.
Yes. So this is his own salary applied using his own skill in his personal capacity. This will not be added to the HUF's income. Okay. The HUF has one house property fetching rent of 10,000. Some movable assets. There is a proposal to make a partial partition of HUF by allotting the house property to C. Is it advisable to do a partial partition? So, understand one thing, partial partition is actually not recognized under the Income Tax Act. And if any partial partition is done, it will be the income from that property will continue to be assessed in the hands of the HUF itself as if the partition has not taken place. So even if they do a partial partition, the income from that house property will continue to be taxed in the hands of the HUF itself. Okay? So it is not advisable to do a partial partition. Is it clear? Yes?
Yes, ma'am.
Yes, yes.
Minor D earned 70,000 by use of his special skill and talent. How will his income be taxed? Will this be taxed in the hands of HUF?
It will not be taxable since the amount was received on because of his special skill and talent. So it should be taxable in the hands of minor only.
Absolutely. This will be taxed in the hands of the minor only because this is the income earned from his special skill and talent. But this will be included in the income of his parent. You have to write this point in the exam. Yes or no? Since this is the income of the minor, this will be added to the income of his parent and he will get a deduction under 50. So he will get the 1500 exemption. Yes, very good.
Can I
Yes,
get change? I think it will not be included in his parents
sorry,
because
what?
of the skill, no special skill. Can it be included in the hands of his parents by virtue of section 64, something
64.
like that?
Yeah,
There's a special provision saying that this amounts received by way of showing skills and proficiency will be handed, it will be what we call assessed in the hands of minor only, but his parents will not be clubbed with that.
no. So, see, if it is, we have not, here they have said that the income is earned by the minor by use of a special skill and talent, right? But you
Yes,
have to, yes, it's because of the, sorry, special skill and talent. So it will not be clubbed in the hands of the parent. You are correct. Because it is of the special skill and talent. If it would have been without the special skill and talent, then it would be added to the income of the parent. You're right. Yes.
that's okay. That's okay.
Yeah. Okay. So this will
Okay.
not be clubbed. My mistake because this is word uses special skill and talent. Okay. A car owned personally by Mr. Ram was blended with the HUF during the year. It was leased out for a monthly rent of 10,000. From 1st October, how would this income be taxed?
In the hands of Ram only, ma'am, because it is his first.
So this will be clubbed in the hands of Mr. Ram. Okay? Fine. Is this clear?
Yes, ma'am.
Okay. So with this, let's take a break of 10-15 minutes and then we get back. Okay?
Okay, okay.
Sure, ma'am.
Ashokji, break. Ashokji? Yeah. Yes. Let me just reshare the screen. एक सेकेंड, आई थिंक कुछ कंप्यूटर हैंग हो गया है. एक बार क्विट करके वापस स्टार्ट करूं. हाँ. So what is the tax rate for the cooperative society? Yes. Sorry, students. Yes. 10, 20, 30. Yes. So for the cooperative society, the tax rate is based on the slab rate. Yes, Geeta, correct. But there is also the concessional tax regime, which is under 115 BAD, 115 BAE, correct? So that is similar to what we have for the manufacturing concerns. Okay. Then what is the chapter 60 deduction for the cooperative society? Yes. Which is the chapter 60 deduction available for the cooperative society? You would have done that. ATP, correct? So there's ATP deduction, which I'm not discussing here at the moment, but we have that. We have already done that in chapter 6A class. Then we have also the cooperative society functioning on the principle of mutuality. What is the principle of mutuality saying? Yes. What is the principle of mutuality saying, students? Yes. Yes, students, what is principle of mutuality? No tax for that, but what is it? What is principle of mutuality? Yes, faster. One cannot earn the profit from one's own self. That is the principle of mutuality, students. Yes or no? So the members cannot earn the profit from the cooperative society. They are functioning for each other, and that is why there is no taxability on the basis of principle of mutuality. Let us look at certain case laws from the module in that respect. Does the principle of mutuality apply to the interest income derived from the fixed deposits made with the bank by the clubs if such banks are members of the club? So basically, the club deposited the surplus funds as the fixed deposit with various banks. These banks were nothing but the members of the club itself. And therefore, it claimed that the interest earned on these fixed deposits is exempt from the principle on the ground of the principle of mutuality. So, whether the principle of mutuality is applicable over here, what does the principle of mutuality say? The principle of mutuality works on that there should be complete identity between the contributors to the fund and the participators of the fund. The action of the participators and the contributors should be in the furtherance of the object of the club. right? And there is no question of profiting from that particular contributions made. It was observed that in relation to these transactions, the club where it deposited the surplus funds earned, right, which are there in the banks, it did that to earn the interest. And the bank is going to use that funds to lend the money further. So the concept of mutuality applies till the date of till the time of the deposit of the funds. Once the funds have been deposited with the bank is going to use that for the commercial operations, for earning the interest on the loans. So there is no concept of mutuality over there. Right? So the element of mutuality is completely gone once the bank uses the money for earning the interest. There is no identity between the contributors and the participator. And these funds are not applied for the common purpose of the club, but to earn the interest on that. Right? So therefore, here the concept of mutuality is not applicable. Is this clear? So Supreme Court held that the interest income earned on fixed deposit made with the banks by the club has to be treated like income from other sources. And if any income is earned through the assets and resources from the person who are not the members of the club, that will also not be governed by principle of mutuality. Is it clear? Yes or no, students? Okay. Next is Supreme Court judgment in Venkatesh Premises Cooperative Society. Are non-occupancy charges, transfer charges, common amenity fund charges received by cooperative society from its members exempt on the doctrine of the mutuality? So, these charges which are there, these are earned to provide the facilities to the members itself, right? So, here there is a complete identity between the contributors and the participator. So, these are exempt owing to the doctrine of the mutuality. Is it clear? Any questions with respect to this? Next one, you are only going to tell me, would the interest earned on surplus funds of a club deposited with institutional members satisfy the principle of mutuality to escape taxability? Yes or no? Whether your mutuality will be applied? Yes, students. Yes, this will be exempt on the mutuality ground. The answer is no. Here, this is the interest earned. Right? As I said, that the interest earned on the surplus fund does not satisfy the principle of mutuality, so this will not be exempt. Next is Sindh Cooperative Housing Society Bombay High Court judgment. Can transfer fees received by a cooperative housing society from its incoming and outgoing members be exempt on the ground of principle of mutuality? Yes or no? Yes, Geeta, it is exempt, right? Is this clear? Okay. Any questions, any doubt? Okay, fine. So this is about the concept of the mutuality, which is respect to the cooperative society. Now let us solve few more questions. This completes your at least a chapter in entirety. Now I want you to solve certain questions so that we get your understanding. Some few more questions on the partnership firm also we are going to solve so that we have the great practice on that area, because that is where you tend to make a lot of mistakes. Okay, so I don't want you to make mistakes, and we will solve as many questions as possible here. Any questions till now? Yes, any doubt, any question? Okay, fine. Okay, so let us proceed with the question solving. One second, let me just open the question. HIG, a firm consisting of three partners, namely H, I, and G. Sorry, I think. Carried on the business of purchase and sale of television sets and wholesale and manufacture and sale of pens under the deed of partnership executed on 1/4/14. HI and G were partners in their individual capacity. The deed of partnership provided for payment of salary amounting to 1,25,000 each to H and G, who were the working partners. A new deed of partnership was executed on 1/10/5/25, which, apart from providing for salary to the two working partners, as mentioned in the deed of partnership executed on 1/4/14, for the first time provided for payment of simple interest at 12% per annum on the balances standing to the credit of the capital account of the partner from 1/4/25. The firm was dissolved on 31st March 26 and the capital assets were distributed among the partner on 28th April 2026. Net profit of the firm for the year ended 31st March 26 after the payment of salary and the debit or credit of the following item was 3,50,000. Interest amounting to 1 lakh paid to partners on the balances standing to the credit of the capital account from 1/4/25 to 31st March 26. What will be the effect? Yes. – 50% disallowed? Yes. 50% will be disallowed. Why 50% is disallowed? Deed not authorized. Yes, Geeta. Yes, Samnathan. So before the deed authorized from the period, which period is mentioned? Yes, what is the period mentioned here? 12% per annum. But the deed was signed on 1st October, right? So 6 months will be disallowed, 50,000. Interest amounting to 50,000 paid to partners on all the balances standing to the credit of their current account from 1/4/25 to 31st March 26. Not authorized by deed, so will get disallowed. Yes, it should be specifically mentioned in the deed that it is also on all the balances. So on the current account balances, this entire 50,000 is disallowed. Yes. Interest amounting to 20,000 paid to HUF of partner H at the 18% per annum. Yes. Loud. But here you will write about that it is assumed that it is paid at the fair market value and therefore the provisions of the 40A to B are not attracted. Right? So since H is a partner in the individual capacity, interest paid to the HUF does not attract disallowance. Assuming that 40A to B is not attracted, the interest will get allowed. Okay? Then payment of 25,000 towards purchase of TV sets made by cross check. Not allowed because it is by cross check. 30,000 being the old value of gold jewelry received as a gift from manufacturer for achieving the sales target. Yes, 30,000 received. This is taxable under which section? 28(4). Yes, Samnathan. This is taxable as a perquisite under 28(4). No effect will be given because it's already credited to the P&L account. Depreciation on motor car bought and used exclusively for business purpose but registered in the name of partner H. Will you get the depreciation? Yes, it's in the name of the partner. Will you get? Yes, we will get. Because it is used for the purposes of the business in the view of the Mysore mineral case, the depreciation will be allowed even though it is registered in the name of the partner. Okay. Then depreciation amounting to 37,500 of new machinery bought and installed for manufacture of pen at a cost of 5 lakh. Allowed. It is already debited, so no effect. Interest on fixed deposits made out of surplus fund. Income from other sources. Yes. So you'll reduce and take it to IFOs. The firm furnishes the following information relating to it. Closing stock at 60,000 as per the method of lower of cost or NRV consistently followed by the NRV was 65,000. Read the question carefully and then answer on this point. No. No, Sachi. Read the question carefully. Yes, Samnathan, correct. So the firm is dissolved. When the firm is dissolved, as per ICDS 2, yes or no? As per ICDS 2, you have to take the closing stock at the net realizable value. Since this has been valued at 60,000, the balance 5,000 needs to be added. Yes, Geeta. Correct? Yes or no? Okay? Clear? Brought forward business loss relating to AY 25-26 was 50,000. So this we will take. The fair market value of the capital asset as on 28/4/2026 was 20 lakh and the cost was 15 lakh. Why is this information given? Yes. Yes, why is this information given? What is applicable when the firm is dissolved and distributes the asset? Section 9B, yes, Geeta, correct, very good. So here section 9B will be applicable, but will it be applicable in this year? No. It will be applicable in the next year because it is as on the date when the assets are received. So this is on 24/2026. So this will be applicable in the previous year 26/27. Okay. One more important point which you should not forget, or which you rather forgot, the depreciation on new machinery is given over here. What about the additional depreciation? Yes, Geeta, very good. Your additional depreciation will be applicable because this is into the manufacture. So on this 5 lakh, you will get the additional depreciation, right? But for how many? 10%, not 20%, Samyathan. Yes, only 50%. So 10% we will get this year, but you will write in the note that the next 10% will be allowed in the subsequent year. Okay? And basis this, you will calculate the salary to the working partners, right, which is 6 lakh 90% on the balance 60%, and then you will allow it. Okay, is this clear? Is this clear? Yes. Can you calculate the salary now? Can you calculate the salary? Are you getting the answer which is there? Yes, are you getting? Yes. No, Geeta. It is 573 or 250. You're right. Yes. Yes, Samyathan. Yes, Babu. 9B is very tricky. It is not. You should watch the lecture of the capital gain. I've explained there in detail. It is not that very tricky. Once you understand the concept, it will be all right. Okay? Fine. Is this question clear to everyone? Fine. Okay. Let us solve few more questions from the module. Bhavik Hospitality Limited is engaged in the business of running hotel of 3-star category. The company's statement of P&L for the previous year ended 31st March 2026 shows a profit of 152 lakh after debiting or crediting the following items. Payment of 0.25 lakh and 0.3 lakh in cash on 3rd December 2025 and 10 December 2025 respectively for the purchase of raw corn to Mr. Raja, an agriculturist, and Mr. Khalid, a spice trader, for purchase of masala used for corn products respectively. Is this allowed? Disallowed? Spice trader disallowed, agriculture allowed. Yes. Yes, Geeta. So under 48.3, disallowance is attracted for payment in cash exceeding 10,000. Payment for purchase of corn is covered under the exception. It's an agricultural produce. However, to the spice trader, it is not covered. So we'll disallow 0.3 lakh, but we'll allow 0.25 lakh. Okay. Contribution towards employees pension scheme notified by the central government under 80 CCD for a sum of 3 lakh calculated at 12% of the basic salary and DA forming part of the retirement benefit payable to the employees in terms of employment. Allowed? Up to what limit it is allowed? 14%. Yes, Samnathan. So up to 14% this is allowed and therefore no disallowance is required to be made. Payment of 6.5 lakh towards transportation of various materials procured by one of its hotels to Bansal Transport without deduction of tax at source. The firm opts for presumptive tax under 44 AE and has furnished a declaration. It has also furnished the PAN in the tender document. No DDS attracted. Why? Why no TDS attracted here? Presumptive taxation, PAN 44A, no. So here there is a link, students. When can a transporter claim the presumptive taxation under 44A? What is the condition? What is the condition? Less than 10 vehicles. Yes, Babu, that's correct. So, and what is the condition for no TDS under 194C on the payment to the transporter? Yes, what is the condition for no TDS under 194C? Yes, Samnathan, TDS is not required on the payment to a contractor who owns less than 10 goods vehicle and furnishes the declaration. No, Sachi, it's not about the income below threshold. It is about the no depreciation or tax credits available. No, Babu, that's not correct. So it is less than 10 vehicles if you are there. If they give the PAN, then in that particular case, the TDS is not required. So here they have given that they have claimed the presumptive under 44A and they have furnished the PAN. So means they have less than 10 vehicles. So the TDS will not be required and this payment is allowed. So here this payment can be without TDS, so no effect. Profit of 12 lakhs on sale of a plot to Avimanyu Limited, a domestic company, the entire shares of which are held by the assessee company. Plot was acquired by Parik Hospitality on 1st June 2024. Other head of income, 100% deduction, no Samyathan. So this will first be reduced from the net profit because this is going to come under the other head of income. However, under the capital gain, you will write that this is exempt. Why is it exempt? Geeta, it is not disallowed. Why you will disallow? You will reduce. Because this is a profit which is included in my P&L. We are not going to disallow it. Disallow means you are going to add back something. This is exempt. Why is it exempt? Can anybody give me the reason? No. Scientific research, no. No. This is the sale of asset to a 100% wholly owned subsidiary. Section 47(4) says, in this particular case, this will be exempt. So, short-term capital gain on the sale of plot held for less than 24 months. Right? This was acquired on January 24. This is a transfer to a wholly owned subsidiary, which is an Indian company. As per 47(4), it will be not regarded as transfer. Clear? Contribution of 2.5 lakh to IIT with a specific direction for the use of amount for scientific research program approved by prescribed authority. Allowed, right? Expense of 10 lakh on foreign travel of 2 director for collab agreement with a foreign company for a brewery project to be set up. The negotiation did not succeed and the project was abandoned. Yes, Samnathan. So when expenditure is incurred for a business, which is a new business, not related to the existing business, and the project gets abandoned without creating a new asset, the expenses are regarded as capital expenditure. Yes, Geeta, correct. So this is a capital expense. Brewery project was different than the current project, current business. So the expenses will be capitalized. Fees of 1 lakh paid to independent directors for attending board meeting without deducting the TDS under 194J. %30 disallowed? Yes, that's right. 30% of 1 lakh will get disallowed. Right? Depreciation 10 lakh, this will get disallowed. 10 lakh being the additional compensation received from the state government pursuant to an interim order of the court in respect of land acquired by the state government in the previous year 23-24. The rate of income, yes, Geeta, that's correct. We will reduce it from the profit and charge it to the other head of income. Yes, Samyathan. But what will it be taxable under that capital gain? Will you tax under that capital gain? No, Samnathan, why? Yes, Sachi, very good. It will be taxable in the year of final order. Yes, Geeta, correct. So this is the interim order. This will be taxable in the year in which the final order is passed. So at the moment, you will not tax it, although you will reduce from the profit, but you will not tax it. Okay? Very good. Dividend received from a foreign company 5 lakh in which it holds 15% of the equity share capital. Less, yes, and it will be chargeable under income from other source. Yes, Samnathan, yes, Geeta, good. As a corporate debt restructuring, the bank has converted the unpaid interest of 10 lakhs up to 31st March 2025 into a new loan account repayable in 5 equal annual installments. The first installment of 2 lakh was paid in March 2026 by debiting the new loan account. Only 2 lakhs will be deducted? Yes, that's right. So conversion of unpaid interest into the loan will not be regarded as the payment of interest. Samnathan, only allowed in the year of conversion? No, only allowed when the converted interest has been paid. So the unpaid interest converted into loan will be allowable only in the year in which the converted loan is paid. So only 2 lakh has been paid, so only 2 lakh will be allowed as deduction. The balance 10 has not been claimed as deduction, so no effect. Okay. Depreciation as per Income Tax Act 15 lakh will reduce. The company received a bill for 2 lakh on 31st March 26 from a supplier of vegetable for supply made in March. Bill was omitted to be recorded in March. The bill was paid in April and the necessary entry was made in the books then. Reduce the amount? Yes, very good. That's right. We will reduce it. Even if it is not recorded, it is paid. We are following the mercantile system, we'll reduce it. Dividend of 7 lakh is distributed on 25th September 2026 to its shareholders. No, it is paid, Geeta. How it will be IFOS? Reduce, Geeta, yes, but where? Yes, students, I'm waiting for your answer. What will we do with this dividend? It is dividend paid. What will be the implication? Other sources, no, Babu, that's not correct. It is dividend paid. How will it's an income. It is dividend distributed. What is the impact of this? Yes, Sachi, correct. Yes, Geeta. So this will be a deduction under ATM. But what will be the amount of deduction under ATM? Entire 7 lakhs? Five lakh. Yes, correct, Sachi. So the dividend was received from the foreign company 5 lakhs, and in the same year before 30th September, they have paid 7 lakh. So they will get a deduction of 5 lakh, yes Geeta, whichever is lower under section ATM. Are we clear about this question? Okay. Is this clear? Any question, any doubt? Fine. Okay. Last question that we are going to deal with is, the following are the particulars relating to two Indian company, Alpha and Beta, which are subject to tax audit for the AY 26-27. Date of setting up or registration is given. Object is manufacture of steel for Alpha and manufacture of leather for Beta. Place is in Bihar and Tamil Nadu respectively. The turnover for 23-24, 24-25, 25-26 is given. Value of the new plant and machinery installed and put to use on 1 November 2025 is given. Gross total income is given of previous year 25-26. Number of new employees employed on the date of setting up or registration are given. Number of new employees employed as on 1/4/2023 is given. Monthly emoluments to 750 employees employed in the respective company as mentioned above by ECS through the bank account. Their payments are given. From the above detail, compute the tax liability of Alpha and Beta. Alpha has not opted for any concessional rates earlier and want to avail the beneficial tax rate under the special provisions of Income Tax Act in the previous year 25-26. Beta has already opted for the concessional tax rate under 115 BAB and wants to continue the same in 25-26. Assume that the GTI reflects the computation under the special provision. Would it be beneficial for Alpha to opt for the beneficial tax rate in 25-26 previous year instead of paying tax under the regular provisions of the Income Tax Act? So how will you start? First with Alpha. What will be the tax rate for Alpha? Yes. 22% for Alpha. No, Samnithan, it has not opted for 115 BAC yet. So what will be the tax rate? It is eligible to opt for 115 BAB. 115 BAE. But what is the tax rate? If it goes as per the normal provision. Geeta, why 15%? How 15% will come? How 15% will come? 25, yes, Samnathan. So 25% rate will be there since the turnover of previous year 23-24 is less than 400 crores. This is 251 crore. So the turnover of previous year 23-24 is 251 crore. So it can claim the regular tax of 25%. Can it go for 115 BAB? Yes. Can it go for 115 BAB? Why no, Geeta? Already registered, so what? is already registered, that's not a problem. But the problem is that the company should opt for 115 BAB in the first year of registration. If it has not opted, then later on it cannot opt for that. So it can go for 115 BAA, but now it cannot go for 115 BAB. Yes, Samnathan. Only before the first filing of the income tax return. Okay? Fine? Yes or no? Okay? So now here we are going to compare for alpha what is better. So first compute as per the normal. So what is the income? 5 crore. First you will compute the deduction under 80 double J double A, correct? So it has number of new employees 50. Okay? Yes or no? Samnathan, yes, at any time, but no. 115 BAA is at any time. Sorry, BAB. BAA, sorry. The BAB, it is only at the first, before the filing the first return of income. Okay? Yes or no? Yes, okay. So, alpha can claim 80 double J double A. Correct? Now, what is 80 double J double A saying? You can claim the 30% of the additional employee cost under 80 double J double A. Right? And for how many years you can claim? How many years you can claim that? Three years, correct? So if they have hired in 23-24, can we claim in 25-26? Yes. Okay, so there are 750 new employees. Will this one get 20,000 per employee, 250 employees? Yes, right? They are eligible. So 20,000 into 250 employees, and this is monthly emoluments. Be careful in the examination while reading. So you will multiply it by 12 into 30%. What about this 25,000 per employee? Are they also eligible? Yes, exact 25,000 is eligible. More than 25,000 is not. So 25,000 into 250 into 12. 28,000 per employee. No, right? So for these two into 30% you will get, which comes to 20,000 into 12 plus into 250 plus 25,000 into 12 into 250 into 30%, 4 crore 5 lakh. Okay? Then here you also have the value of the new plant and machinery installed and put to use on 1/11/2025 is given. What is the use of this? Yes, Samnathan, that's correct. So this is given for the additional depreciation. Correct? So this is given for the additional depreciation. So we are assuming that the normal depreciation would have been computed. Right? So here we are saying that the additional depreciation we will calculate. How much will be the additional depreciation? 8 crore into 20% into 50%, right? Because it is on 1/11/2025 put to use. So only 10% you will get. Balance 10% in next year. Okay? Fine. So if you compute the tax liability, 5 crores minus 80 lakhs, additional depreciation minus deduction under 80JJAA 4 crore 5 lakh, the total income comes to 15 lakh. On this, you will compute the tax rate of 25% and the cess of 4%. Okay, which comes the tax liability to 3,90,000. Now you will compute under 115BAA. What will change under 115BAA as compared to the regular tax? No additional depreciation. Will you get 80JJAA? Yes, right? So 55 crore will remain the same, 80JJAA will remain the same, and then we will compute the total income. We will not give the additional depreciation. Under 115BAA, it is 22%, right? Plus surcharge of 10% and the cess of 4%. Tax liability comes to 23,90,960. Now this is much beneficial as compared to the, which one is beneficial? Regular tax or not 115BAA? It is 23 lakh versus 3 lakh. Which is beneficial? 3,90,000. So it should not opt for 115BAA. It should go for regular tax. Okay. For beta, it has already opted for 115BAB. Okay, and it wants to continue that. So there we will give the 80JJAA on 5 crore. You will give 80JJAA. Again, we look for beta. Will you give on this 21,000 for 250 employees? Yes. Yes, right? So 21,000 into 250 into 12 months. 25,000 per employee. Yes, right? 25,000 into 250 into 12 months. Right? And into 30%. So this comes to 4 crore 14 lakh. 86 lakh is my total income. On this, I will calculate 15% and then I will add the surcharge and the HEC, which comes to 14,75,000. Is this clear, students? Yes? So we have done a much more comprehensive sum than this last time, where we also found out which deductions are available or not. And we also compared it with the MAT provision. Yes or no? Okay? Any questions, any doubts so far? Fine. We'll do some few more case laws which are left out before we close the session. Let us discuss few case laws. Yeah. From the module. Yes, Samnathan, you're right. This is Madras High Court ruling in the case of metal and chromium platter, which is regarding should the capital gain exempt under 54 EC. 54 EC says that if you have a long-term capital gain, you invest the amount in the bonds and therefore it will be exempt, right? So if the capital gains are exempt under 54 EC, but these capital gains are included in my net profit in the P&L, should it be taken into account for the purpose of computing the MAT? So the Madras High Court has said that the capital gains, if these are exempt in 54 EC, even though 54 EC is a provision which is applicable under normal tax regime, in that case, the incentive of giving this exemption goes away if the MAT is to be paid on that profit. So for that, the MAT should exclude the capital gain which are exempt under 54EC. So if a question is asked in the examination which says that the assessee has invested the amount in the bonds, then if the MAT is to be computed, you have to exclude it from the MAT relying on this particular judgment. Are we clear? Yes, Sachi, you have a question? Yes, Sachi?
Am I audible now?
Yes.
I am. I had a question. Means that 13th we were attempting now. So in that, uh, in examination point of view, I'm asking means we compared for A and B both, Alpha and other company at the last, that which one they should opt, because Beta was already, means question was not asking. So in exams, do we need to compare, or it was
No,
for practice only? And
no,
because
for
we will
beta
not
we
get
didn't
too much
compare.
time.
No, for beta we didn't compare. We only compared it for alpha. For beta, we have just calculated the tax under 115 BAB.
हाँ वही just I wanted कि means it is not mandatory, so we will not be doing because we don't have time
Yeah.
at that time.
No time also, but since the question is very explicitly telling you that it will continue with 115 BA, you cannot come out of 115 BA.
Yes, right.
Yeah. So you don't need to calculate as per the normal tax. In fact, if you do it, that means they will deduct your marks because then you have not understood the provision. So you don't need to basically. The
Sure,
question
thank
is explicitly telling you. You can decide before going back or before going to 115 BA. But you cannot just, say that, okay, I have gone and then I need the comparison because you cannot come out once you have gone into that. Okay? Okay. Next case is Anil Hardware Store, Himachal Pradesh court ruling. In a case where the partnership deed does not specify the remuneration to each individual working partner, but just provides the way of calculating it, would the assessee be entitled to deduction of the remuneration paid to the partner? So the court has said that the manner of calculating the remuneration, if it has been specified, even if the amounts have not been given, yeah, so then the partners have the ability to decide how to distribute the profit between themselves in the form of remuneration. So the method has been laid out and therefore that is fully permissible. The deduction will still be allowed. Are we clear? Next case is Supreme Court ruling in Rolta, India, where the question was, can interest under 234B and C be levied where a company is assessed on the basis of book profit? Yes, because book profits are deemed to be the total income. And once it is deemed to be the total income, you have to pay the advance tax. If you fail to pay the advance tax on the book profits, then 234B and 234C will be applicable. Fine. Next is the Supreme Court ruling in Govind by Mamaya, which is where land is inherited by three brothers, compulsorily acquired by the state government. Would the capital gain be assessed in the status of AOP or in the individual status? So the Supreme Court noted that these brothers have inherited the land and then it was compulsorily acquired, right? So here they got the land in inheritance. And whenever this land was also acquired, capital gain was earned, they did not form the AOP to earn the profits. They did not carry out any business venture. Here, the capital gain accrued to them because the land was compulsorily acquired. So for assessing any entity as the AOP, they have to basically have the will to carry out the business through the common efforts. So this will not be considered as AOP. They did not have will to carry out any business through the common basically efforts to earn the profits through a common will. This was a compulsory acquisition. So therefore, it will be assessed in the individual status and not in the status of AOP. Are we clear? So this completes your entire chapter. In the next class, we'll start with the assessment of the trust. Fine? So I want you to revise the trust topic very carefully so that in the next class, we are able to solve the questions and we are able to revise it very quickly. So thank you so much for today's session and we'll meet in the next class, but please revise and come for the next class. Any questions? Yes? Okay, so if there are no questions, I think we can close the session. Yes, session over. Thank you.